How do you know what property is the right choice? People love to say you can't go wrong with property. I'm going to show you in the next few episodes that's simply not true. Profit versus poor choice. Same time frame, same budget. One choice made massive profits, the other was a poor choice. I'm going to open up what made the poor choice so bad, what was different about the profit in property, and how you can tell the difference between the poor choice and the profit. I'm Junge Ma, lead research analyst at InvestorKit. Now let's get into it. Today we're going to look at two properties. One is just across the road to the iconic Bondi Beach, and the other 2 kilometers from the beach at the Gold Coast. Now we're looking at the first property. It was an off-the-plan apartment back in 2013, sold for almost $650,000 in October 2013. It is a 1-bed, 1-bath unit without car space. It says 75 square meters for the floor area, but realistically, I believe 49 is the real number. As I mentioned, it was sold off the plan in 2013 and it was completed in 2015. Location-wise, if we look at the map here, you see that amazingly, location-wise, I don't think you can get anything better than this. And let's move on to the second property. For the same price, what you could have got in Gold Coast. But remember, 10 years ago, Gold Coast wasn't as popular as it is now. The suburb is called Mermaid Waters. House is a bit old, as you could see here. In 2003, it was like this. And in 2022, not too much difference. This house itself was built in the 1980s. 4-bed, 3-bath, 2-car spaces on a land of 619 square meters. And again, it was sold in the end of 2013 for $645,000. Just $5,000 below the price of property number 1. Location-wise, let's have a look at the map. It is not far from the water, but the water is not a sea. We keep zooming out and you see the beach is here. And if you measure the distance, it's approximately 2 kilometers from the beach on the east. So comparing the two properties, one brand new, just across the road of the iconic world-famous Bondi Beach in Sydney, and the other house 2 kilometers from a Gold Coast beach. 10 years ago, remember, Gold Coast wasn't that popular as it is now. Which would you prefer as an investment property? I'll give you a minute to decide and we'll reveal the answer when we're back. So, time's up. Let's check how they're doing 10 years later. Property number 1, the Bondi apartment. The current estimated value is $850K. As you can see, it is a low confidence estimate. And if we calculate the growth rate, it will be around 31% in 10 years. And if we look at the rental estimate, $923 per week, not bad at all for a 1-bedroom apartment without car space. Again, it's in Bondi. And now let's have a look at the house, property number 2 in Gold Coast. In 10 years, the current estimated value is $1.73 million. Again, it's also of low confidence. It's actually doubled the property one's value at this moment. And if we calculate the growth rate, it will be around 165%. And in the rental estimate, medium confidence estimated to be rented for $1,200 per week. Compared to property 1, it's also much higher. So I believe it's obvious for you who is the profit and who is the poor choice. So what made the poor choice poor? 2 things here. One is, again, the unit asset type. Unit as an asset type, in nature, it suffers from oversupply. For this Bondi apartment here, to be honest, the unit supply in Bondi itself didn't really increase a lot over the 10 years. If you look at the number of listings from 2014 to now, it's actually quite stable. But what happened? It's actually related to the supply level of an apartment in the whole Sydney area. Think about it this way. When Bondi's unit prices go really high, part of the residents there or tenants there or potential buyers there would be pushed out of that market and move a bit to the west. Housing demand in the west area would go up, prices will go up, and then again push another part of tenants or potential buyers further west. And this cycle goes on and on and on, and eventually housing demand would be evenly distributed across the whole Greater Sydney area. That is why Greater Sydney's housing demand and housing supply is closely related to the Bondi Beach housing market. Second thing here is off the plan. Unit itself is already very low in value to asset ratio. Most of its value lies in the building itself instead of the land. But for property one, it is off the plan. It's a brand new building. More money that you paid for the property went to the building itself instead of your land. In comparison, the Gold Coast house first enjoyed a sharp decline in supply level. In the 10 years from 2014 to 2024, the house number of listings there dropped by 65%. And on the other hand, that property is relatively old house on a big piece of land. So most of the money you paid for this house just went into the land, which will appreciate over time. So how could you tell the difference at the beginning? How could you avoid the poor choice back in 2013? I would say there are two red flags to watch out for. Red flag number one, off-the-plan apartment. As we have discussed before, in nature, it suffers from oversupply, not just in this one suburb, but the whole Sydney market. And two, it is super low in land to asset ratio. And red flag number two, the assumption that location will do all the heavy lifting in property value growth. Bondi Beach is no doubt one of the best locations for a property. If you are a believer in location is everything, you would have gone for the Bondi apartment, our property number one. In the end, location is just one piece of the puzzle, and you need to consider so many other pieces together to get a whole picture of what's happening in the housing market and how is it going to grow. So today we've looked at an apartment at Bondi Beach and a house 2 kilometers away from a Gold Coast beach. The Gold Coast beach house won in both capital growth and cash flow. In the end, if you remember not to fall into off-the-plan brand new shiny apartment and don't think that location is everything, you could have avoided the poor choice. If you're interested in profiting from property investing, click the link in the show notes below to chat with one of our team members at InvestorKit today. My name's Junge Ma, lead research analyst at InvestorKit. I'll see you next week.